Good morning, Predicted Trades family. Hope everybody's doing well. It's time to dig in and get back to the market. Hope everybody had a great weekend. But let's just jump right into a review. If we go back a couple of weeks, we had our CPI data that shot us up off of this 41.36 and started a very nice rally up to the daily 200, which we gave a tap and then started a downtrend. One thing that we should, one thing I wanted to kind of cover is as we started this downtrend, you can see that we would fight back up, but then get stuffed right back down. And that kind of led us into a Friday potential to break down or get back up, right? And we started to see pre-market that we got that breakdown. We gave out, here, I'm going to turn these off for a second. After we hit our highs on Tuesday, we came down and gave out that 4-hour 8 MA, kind of our first signs that we're going into consolidation. We could start to head down. On Wednesday, we kept trying to fight back up above that 8-hour 21 and 8, but we could not stay above them. So on Wednesday, these candles were kind of a big sign that we could be seeing a change in trend coming. Normally, if we're going to have a pullback and bounce, that 8-hour 21 should provide a good floor. It lined up perfectly with that key number, 4273, but you can see we kept slipping through that floor, right? Which is a good sign that we're going to go visit that 4-hour 45. On Friday, we got there, and it tried to be a floor, but it gave out. So good signs for heading down and for reverting to the mean on the daily. Turn my dailies back on. So the blue line is our daily 8, which, we wedged above until Friday, then we fell to it. That daily 8 and that 4-hour 45 overlapping to try to provide that floor. If we were going to try to fight back to that 200, we had to hold that floor and bounce up. We slipped that floor pre-market. We bounced up, but then ultimately gave out that floor. So that was your big sign for downside and a possible reversion to the daily 21, which now sits right at this 41.65. It's always, in a way, it's kind of beautiful to me that they will take things sideways long enough for key moving averages to catch up to key levels, just to add confluence to how important this is. We need to bounce and head back up for continuation on this drive. And the same holds true whenever we're looking at those moving averages. On Wednesday, we needed that 21 to hold and get above that 8. We didn't get that. Same on Thursday. Tried to hold, even looked good, but then by the time we're overnight to Friday morning, looking good is now looking the opposite, right? And at a key wedge like this, a lot of times it's good to just take a little bit of risk in each direction, because we never know what's going to happen overnight. And a little bit of call and a little bit of put, you would have woken up already like, okay, looks like we're just going down. So either way, here we are. We find ourselves that we tried to hold that channel on Friday, but we can see we were closing near it. So no surprise, we open at it. We reject it twice overnight and right down out of that channel. Opening up at our next key zone. before we get down to 41.65, where the daily 21 has caught up to. So what can we expect for today? Well, before we dig into that, let's just look at our economic calendar. I always ask that question just to remind myself. This week, today, we have a little bit coming out at 8:30. National Activity Index. And then tomorrow we have around 9:45 some manufacturing PMI. Wednesday, durable goods, core capital equipment. Thursday, initial jobless claims like we always do. And some GDP. So Thursday looks like it's going to be a good amount of data. And then Friday as well, we have PC price index and disposable incomes and personal incomes, trades and goods. Powell will be speaking at Jackson Hole, 10 a.m. on Friday, same time. We have that University of Michigan's data coming out. So, Jackson Hole, the Jackson Hole retreat can bring some interesting reaction and economic data that they need to digest. Also, we have Tesla splitting on Thursday, Friday being the post-split day. With all this economic data and Powell speaking and post-Tesla split, Friday could be, a little choppy while things are digested. And we'll have to see where we are Friday, how this week goes. Because going back to where could we go? We have to have kind of scenario one, right? Where we hit the mean, bounce back up through channel, and keep trucking up. We have been on a good run for June and July. Since the bottom in June. And this consolidation and wedge that we broke up out of, just been on a good run for, I guess we could just say July, but I'd say June is when it started because we got a good run, a little dip, another good run, little dip, and then a big old run, right? And we're coming back to moving averages. Our daily 50 now sits just a hair above these key levels that gave us a bounce last time. We got above the daily 50, pulled back to those key levels, slapped the daily 50, and kept going. Now we are very bullish in our moving average orientation. The 8 above the 15, above the 21, above the 50. We are still above the 200. That's what we hit and rejected, as we were pretty much expecting. We were getting to third Keltner on everything. We were getting near highs of year. We didn't even hit that trend line. We hit that daily 200, third Keltner. So we expect a break to be taken, some profit taking. And in a normal bullish stacked EMA, we expect that profit taking to come back to the daily 21 for a bounce and continuation in a bullish setup. We can slip that daily 21 to get to the 50, but then just since the 50 is so far below, back below 4,000, that does set up a little bit more of a, if we can't hold the 21 and start to lose it, A, we know where we're going to, but B, it's going to maybe start some of that panic selling type stuff, right? We do have this consolidation when we had a slight pullback to the daily 8, that 4-hour 45, see how they overlapped, and caught a bounce. So we could hit this daily 21 and slip down to this 41.36 just to test this consolidation and find buyers if they don't step in at the 21. And that zone, which is very key and important, could provide us a bounce back to the daily mean. So, just point being, scenario 1, in a normal bullish setup, we'd expect it to come back to the daily 21, catch a bounce, and start heading back up to these highs. We can slip that 21 just enough to get down to this zone, where our POC used to sit at 41.20 and 41.36. If you guys remember, back here going into CPI, POC was bouncing between 41.20, 41.36 and a half. So we could slip the 21 just enough to tack those old POCs, old point of controls where a lot of volume exchanged hands, and catch a bounce there to get back above the 21. So scenario 1 for me, for continuation, looks like getting to the 21, getting to this 41.20, 41.36. And we don't have to get down here, but it is where a lot of volume exchanged hands. It's where a lot of liquidity sits. If we don't catch a bounce at the 21, this is my last bounce point. If we can catch a bounce this week at either of these levels, 41.65, 41.36, 41.20, right, and get back above them, then we are looking good for the continuation play. Then a number of things can happen. We can get down to these and bounce back up and maybe even get to 41.90 and hit the bottom of this channel and die again and get back down to these and see if we hold again. So there can be a number of scenarios like any time, but overall that's kind of scenario 1. Scenario 2. Let's bring that 50 into view, right? Scenario 2, we start to get down to the 21. We can't hold that. We get to 36 and 20. Catch a little bounce, stay under the 21 or under the channel, the down channel that we were in. And then we come back to retest the 21. We consolidate, we chop, chop, chop. While they digest, if we are going to stay in a bullish rally, while they wait and digest any information that comes out from the Jackson Hole retreat. So scenario 2, kind of that sideways. Now that we're here, consolidate, bounce around, keep giving the look like we're going to go up and down, but really not go anywhere. And then scenario 3. We start to slip through and test those old POCs. We stay below and reject and fall through those old POCs. And then we start to set up a potential, like 150 point drop down to 4,000. That daily 50 sits a hair below, but in a few days we'll be much closer. Let's take a quick look. Yeah, it's setting up right around 39.80. It will start to get flatter now that we're coming to it. So about 49.80 to 4,000. Plus, we got these key levels here. That would be scenario 3. Getting through POCs, rejecting them, and starting the trek down to the daily 50. So we'll have to see what we get. We have to see what these interactions provide when we get to these key levels. And now let's just start stepping down to our lower time frame. And we'll switch up from just our moving. Oh, whoa, yeah, one last little thing I wanted to cover. If you step down from that 4-hour time frame to the 2-hour, 1 hour, or 30 minutes, you'll start to see that on Friday, when we had that gap down, this push broke every one of those time frames, violated that 45 and changed trend and flipped the MAs. So that coming into Friday, we were under every moving average from lower time frames as we were testing that 4-hour 45 and gave it out. So just another thing to keep an eye on that definitely, at least to me, looking back, lended to we should be mainly playing puts off of MA rejections, because you can see, in the first 30-minute candle, we were testing the 21, that 42.60, and we gave it out. Once we're back under that 21 moving average at about, that 42.57, that's when we should be looking short and playing the short and catching maybe some bounces at key levels. But then when we're testing MAs again, continuation, another short. So, looking at today, we've set a pre-market low. We're trying to set a higher low. So we'll probably start to base around this 41.83. We'll start to see a cover pop, most likely. But that 30-minute 21, around 41.95, 4,200. So overall, since we have started setting higher lows, it looks like we could potentially get a cover pop. And maybe, I wouldn't expect us maybe to get back to filling the gap, but getting back up to 4,200, 42.05 for a test, that daily 15, does get us back to testing the bottom of this channel. That 45 on the 30-minute will be coming in there. We should maybe look at, let's look at a 2-hour real quick. Yeah, 2-hour. No, that's filling gap. Let's go to 1 hour, sorry. To find the point I'm trying to make. Yeah, there you go. So the 1 hour 21 will be arriving at that 42.05 around open. And as we saw, the 30-minute 45 will be right about there as well. So looking like we could be setting up for a little cover pop after such a big gap down. I'm expecting, if that cover pop can get through 41.90, to get up to 42.05, the daily 15, and the bottom of that channel before a rollover lower into the daily 21 and that 41.65. We can clearly reject before we get here. But if they are going to try and make it a strong cover pop, I expect it to get to about this 42.05 and then roll back over. We could easily, reject this 41.90, staying below that, just like we already pretty much did pre-market. So we could reject that 41.90, give out this 41.83 and head lower. But you can see my key levels. You can see where we're trying to base. So I'll be starting to think about that cover pop back to these key levels before the rollover. And ultimately, giving out these pre-market low and higher low is also a trigger for downside to the daily 21, that 41.65, and, next stop will be that 41.36.5 zone. We are down, close to an ATR almost. Yeah, about 15, 16 points off of an ATR. Which gets us down to this zone. Interesting enough, they pulled up pretty much to where one full ATR gets us there. So let's see if we get that little cover pop. Let's see if we get that rejection and roll back to the daily 21, or we could just look weak and slide straight to it. I'll be watching, that 1 hour 8 and back to this 30-minute, that 30-minute 21 and 45. let's see if by open, we do have some data coming out in a few minutes. Let's see if by open we're back up in this zone and back above that 30-minute 8. So, enough about moving averages. Just wanted to give some quick little lessons as we went through that review and talking about where we can go, focusing on moving averages. Now we'll load up our normal study set. All right, before we dig into the normal study set, let me know in the YouTube chat what you guys think. I talked about scenario 1 for this week, where we drop down, get our mean and our POCs, and start heading back up. Scenario 2, where we just consolidate. And scenario 3, where we maybe start to show signs that we're going to give out the 21 and head to the 50. Let me know in the YouTube chat which scenario you think is likely. Maybe we'll do a little poll. At some point, I gotta learn how to do those polls live. There's a way to do it in YouTube. I'll figure that out. So, let's see. No real squeezes, actually, in place. Some dailies are around on key names, but on the market, we fired all those squeezes to the downside. We already fired daily squeezes to the upside to get back to the daily 200, and we saw all those squeezes start to set in. And as you can see, this 4-hour right here is what we were hugging in that consolidation, hugging the bottom of it, never really breaking out of the lower time frame squeezes to get back to the 4-hour top. Just good to note all these when we go back to review so that we know what it looks like. On a good run, we get to a key moving average. The squeezes start to set in. 30-minute, 1 hour, 2 hour, and a 4-hour after just 2 days of consolidation. On Thursday, all those squeezes were stacked and we never broke through the smaller time frame ones. We kept looking like it, but every time we hit them, rejection. So this is what it can look like when we get on a good bull run and start consolidating. Our squeezes can even start to tell us stuff. We can, every time we fire a 30-minute up, we just get stuffed. Can't get through 1 hour and 2 hours. Not going to get back to 4 hours. 4-hour fires down as they all fire down, right? So no real squeezes in play. Watch these key levels. Looks like we are testing our higher low now, but we have that data coming out in a second. So let's see. Who knows, that data could come out and we just end up at the mean at this 41.65. I will say, if you load in Beast, we are down in the outer shaded region, and as we've seen many times, when we open in that outer shaded region, we do get our cover pops. So I am gonna, be ready for that cover pop. I might even play some calls up to these levels, but I'll definitely be watching and ready for puts on the rollover. We could even get a day of consolidation before we get back to the mean, but we're so close. I have a feeling we're gonna just get to it today at some point. NQ. Sorry, I did not mean to spend like 20 minutes on ES and review, but it's always good to note where we were. If you didn't swing any short positions into this week, nothing wrong with that. But we should at least recognize what's going on so that next time we are ready for something like that, right? On these pops on Friday, that's where folks are loading into shorts on Friday and for this week. So nice. Looks like so far we've got scenario number 3, little pop-up, reject POC, and back down. Yeah, pretty much everyone is thinking little cover pop and drop. Let's see, on NQ, already below the daily 21 on this drop. had not quite got to it, but we did give out the daily 15 and 8 on Friday. You know, consolidating near this 220, pretty much open right at it, and reject it, and start the journey down. We're below the daily 21. We're down a darn good amount, almost a full ATR. So let's see if we can hold that pre-market low, catch that little cover pop up to the daily 21, maybe to this 150. You know, if things really want to get spicy, we could get. I don't expect us to fill gaps today necessarily, but at least get up close enough and come back. So watch that 150, that 220, both key levels. You know how my key levels are. If we do start to get a cover pop, at least the first target is the 21, then we got those levels. We do have a down channel overnight to keep an eye on, and pretty much the top of that channel is near the 21. So where can a cover pop stop and keep going? Not really panicking that NQ is below the daily 21. We'll check in on each index, and of course NQ would be the one to get back to the 21 first. NQ's been leading lately. YM's not really been leading lately. So what leads to the upside can lead to the downside. So let's see what we get. If we do get up here and reject and lose the 21 and we're going for further downside, that next Keltner back at 12,836. And we do have these lows that we bounced at last time around 960 and that psych level of 13,000. Ready. Almost to the 21 pre-market on that low. Let's see, cover pops. Could get up to the top of this channel and that overnight low that we tried to hold around 45. We get the psych level of 50. And 40 as well, that we just rejected. So let's see how we do with this channel on the 30-minute. You know, if we start to break this channel on the 30-minute, setting higher lows, then we know that we're potentially going to get a little bit of a stronger cover pop to maybe get back to where the gap started, which will be at least on ready here, that 1955, 58 zone. So rejection points at overnight channel tops and at these highs and gaps, right? Moving averages. And if we give out the 21, we've got that big key psych level 1900. You guys know I've talked about that. And that first Keltner has caught up just 10 points below that. So that'll be the next zone. Should we get below and reject the 21? YM. Still above the daily 15, 21 much lower. So you could say, oh, YM's holding up a little better. I'd just say like they did not rotate into it so strong. You know, I mean, we did get above the daily 200 and we held it for a number of days. Now we're just slightly coming back lower to the 15. The 21 sits down not too far above that psych level of 13,000, and we have our 32,900 as well, which used to be the top of all of our consolidation before the CPI numbers came out. So overall, let's see, YM could get a bounce at that daily 15 and come back up to test this daily Keltner and key level around 520. Where we bounced overnight at one point. So if we talk about cover pops, watch that first Keltner up and 33,520 as a rejection point, just a little past where VWAP sits currently. If we do get through that 520, we have the daily 8 there, basically where that gap starts. And rolling over, we have the daily 15 around 33,300. If we start to, I can see us get through 300, bounce at 200, come back to reject 300, and then set up the drop that gets us down to the daily 21, which is just a hair below 33,100. And if we start getting through that psych level, 33,000, 32,900 on YM. Apple. We got up above our key level, 172, 171. Talked about that, we can push off of this to get to 175. If we start to reject 75, we're probably coming back. And once we start to give this zone out, we're probably coming back to 165. The overnight has got us very close. 165 still a little lower, and the daily 21 still sits down there. POC was down there. Oh, let me expand my POC, sorry. Come on. Are we frozen? Yeah, we're frozen. While we're waiting on this that is frozen, I'm going to start experimenting with some slightly different formats for our preps. It may even become pre-recorded so that we don't have to deal with charts loading, with toss freezing, just so that we don't, so these preps can go faster, so we're not tied up messing around. All right, POC did jump up to 173, but before that it was at 165. That is one reason that we mark where POC is, whether it's in your notes or writing it on your, or putting it on your chart as a price level. That's why we mark where it is, and we will leave it. Even if it starts to move up, we'll start to mark the new one, but know where the old one sat. I can just remember from my notes and memory. It was at 165, now the daily 21 has caught up there. So, point being, if we give out this daily Keltner and daily 15, where you can see that we're trying to base pre-market, the next stop will be that 165, where the old POC was, and the 21 sits. We could hold this daily 15 and get a bit of a cover pop today to get back to test 170. You can see this little pre-market wick tried to reach back up to our zone. So, we could even see that cover pop if it got through 170, get to our zone for one more test before rolling over. So if we get a cover pop, watch 170, 170, 130, and this wick from pre-market. And should we start to give out 169 pre-market lows today or tomorrow, we are likely headed back to 165. So definitely watch those puts. AMD. AMD was a great gauge on Friday as well. Already getting back. Inside of that daily 8 and 15, and that daily 8 cut in half this zone that we had from 98 to 99.2. So it gave us a nice little pocket on AMD that if we can't hold that daily 8 and get moving through that 99.2, we can roll over, start to lose our 98, and cascade to 96. That's what we got, giving out that daily 8, right on through to 96, and even a little bit further. Fought back up to that 96 for close, but now we gap down to the next key levels. We're below the 21. The next Keltner sits at our 91.91, pretty key level for AMD. And right below that, we got some more, but basically looking for this little zone to hold if the market is going to try to hold the means and bounce. this week. If we're going to roll over past the 21, probably going to give out this zone around 91, 92. Amazon. Amazon on Friday, kind of the same thing. We had the 15 and the 8 creating a zone that we couldn't get through during the cash session, so right back down. We are already arriving at the 21 and this 135 pre-market. If we give that out, then we're heading down to 131, where the next Keltner sits. But if we can hold around this 135, 134, we'll try to get that cover pop back to 137, 138. BA slipped down to the 21 and our key zone, now gapping down to the next Keltner. Let's see if that Keltner can hold and give us a cover pop back to our zone in the daily 21 today or tomorrow. If we keep rolling, we do have the bottom of a daily squeeze down at 154, where that next Keltner sits at 153. Ooh, cat, look at you. When the whole market went down on Friday, cat stayed above our key level, bounced off of its squeeze bottoms, obviously coming back down with the market, but still trying to hold our key level and squeeze bottoms. So definitely keep an eye on cat, because if we start to get those cover pops, if we start to get some bounces, cat could get that rotation as it's holding up strong. But ultimately, if we give out this key level and start to push into these squeezes, we have the daily 15 and 21 down below at 191. We got a key level at 189.5. So if we are going to fire these squeezes down, these will be the next stops I expect us to try to hold. And if the whole market is just going to keep getting weak and give out the mean back to the 50 down below. But definitely like the setup on cat, especially if we were just trying to get back to the mean on the market and bounce, right? So definitely keep an eye. Googly. Was definitely weak on Friday, got back to the 21 and closed below it. So now we gap down near the 50, right? Ultimately, looking to roll over and test that daily 50 and try to hold. Google loves the daily 50. It also loves the daily 26. Not something we normally track. Might even be worth throwing on. Obviously, it's going to fall somewhere here. I know that sounds weird to just throw out, but just from tracking Google for years, there are certain averages it tends to gravitate towards. So ultimately, I expect us to get down to this daily 50 to settle around 113. But below that, the next Keltner is at 111.5. If we catch our cover pop, looking to get back to that 116, maybe even 117, but 115 is going to be a struggle. So yeah, it could just get to that one, that daily 50 and this first Keltner down and settle. Kind of already arrived. GS gapping down to the daily 200, daily 15. Let's see if it can hold around 343, 342.5. If we catch a cover pop back to 346, maybe 347 where this low was, 347.5. If we give out that daily 200, the daily 21 is down near 338. JPM, when do they report? Already announcing earnings for October. Interesting. JPM, if we get a cover pop back to the daily 15, daily 21, around 118. And ultimately, rolling over, looking to get back to that daily 50, around 115 and a half. We're also with that first Keltner down. Meta already below the daily 50, just a weak name. If we want to start talking about rolling over further, we have the next Keltner down near 160. And we have some daily squeezes and 2-day squeezes down near 152. So with such a weak name, as things roll over, could get down to these daily squeeze bottoms. So we could have another 10-point drop in Meta this week if everything's looking weak. Microsoft already back to the daily 21 and the psych level of 280. So looking for those to hold on a cover bounce, looking to get back to 285. If you can see that little pre-market print already. And if we start to lose 280, back to 276, 275, where that first Keltner sits. Netflix. Holding up well, still above its daily 21. And still has a 4-hour squeeze intact. So, let's see if we get a full tap of that daily 21 at around 231. And psych level of 230. See if that little zone can hold us up. And, it wouldn't be too hard to get a cover pop to at least the lows. We've already kind of rejected Friday's lows. So, cover pop looking to take out 236 and then get back to this trend line around 238. If we can get through that, then we want to test those highs from Friday around 241 where that daily 8 sits. Also have that daily 15 right around that 237. So holding up decent though. Nvidia, not so much. Rejected the 8 and 15 straight through the 21 on Friday. And now we gap down. We're near this first Keltner down and the daily 50. Chips not the strongest. And that whole run up, they pretty much stayed under first Keltner, only got above it a little bit. So if we do see more rolling over, wouldn't be surprised if Nvidia got down to this daily 50 and this daily squeeze bottom at 169, 170 for the daily 50, 166 for the bottom of that daily squeeze. QQQ. Back at our key zone here at 318.24. I'm sorry, 316.24, 317.75, and 318 is kind of the big key level. We've already got a pre-market silly wick back to 322, kind of Friday's lows. So on a cover pop, watch this trend line. Yeah, let's see if we can base at this 318, catch a cover pop back to 320, 321, before rolling back over, basically already at the daily 21. If we start to give out that 17, see if this 16 can hold us. And if not, next stop is 312, where that first Keltner sits. Roku. Every time I hit these names, I just want to skip them immediately. Roku down at the bottom of a daily 2-day squeeze and a daily squeeze, sorry. So, basically, I guess we'd be looking for it to hold 68, 70 in the bottom of this squeeze. Obviously, we can swing even further, even down to first Keltner and still be in this 2-day squeeze. But if we are going to at least hold the mean on the market and whatnot, looking for Roku to hold the squeeze bottoms and start to trek back to moving averages above if we are going to get that scenario 1 on the market. Shop. Also down there, squeeze bottom, also weak, weak, weak. And you know, there was opportunity to short it from 40 back down, but they made it a very slow grind with tons of cover pops, which, you know, choose away at your options. I mean, look at this day. Do you think anyone really made anything this day if they weren't swinging? That's why I'm not loving these names lately. Snow, when do you report? So snow reports this week. So let's see if we hold this daily 21. Looks like snow reports on Wednesday after the bell. So I'm not going to touch it till then. Let's see if it can hold the daily 50 into earnings. It might even get a little bit of a cover pop and run into earnings. If it does, it'll get back to the daily 21. But it might be something interesting to watch this week for earnings. SPX. So SPX opened opened and dumped straight to the daily 8. And this 42.34. And then basically chopped between that 34, that daily 8, and this gap fill zone, right? Slipped down to the gap fill zone, fought back to the daily 8, back to the gap fill zone, tiny bounce. Now we're going to gap through this gap fill zone, so it will actually grow to wherever we open today. Currently at 41.80, so we'll be opening near 41.80, near these levels. So if we catch that, and actually near this gap. Let's extend this over. So we're going to be opening near this gap, in between gaps. If we catch that cover pop, probably going to be off of this gap fill to fill a little bit of the gap we have today, and maybe to the bottom of this gap fill around 42.07, just like I said over on ES, getting up to 42.05. Let's see. If we can start to get into this gap fill zone, looking for it to get to that 42.18 for rejection, which would basically fill this old gap, fill our gap down, and then could provide that rollover. Just talking if we have strong cover pop, right? We're going to be opening near the top of this gap fill at 41.80. It is a big gap. That would get us down to that 41.20, right? Just like we talked about getting down to 41.20 on ES. So let's see if we catch our cover pop. Watch that 4200, 4205, and if we really are strong, 4218, but then back below that 4200, probably going to come back, fill this gap to 4120. Yeah, pretty clean. No squeezes to speak of on SPX. We also have that daily 21 for SPX right at around 4160 to keep an eye on. SPY. SPY, just like QQQ, arriving at our zone. Let's see if that zone provides support to pop back up. Watch 418 in the top of this overnight trend line from the highs, because we could catch a small cover pop and roll back over. We have the daily 15, I'm sorry, we have the daily 21, likely going to be around 415.5. So if we give out that 417.32, coming to 415.5. If we slip that, 414, very big, very key for SPY. I could see a slip through the 21 to catch that 414 and then bounce back up. That would be like ES slipping down to that 41.36.5, right? So let's see if this zone can provide support, give us a cover pop, if we can get through that trend line from highs, back to that 419.5, 420. And, you know, we got this little pre-market high, or overnight high as well, which would basically be filling the gap to Friday's low, around 41.25. And as we give out pre-market low, we have our target to the downside. Square at the daily 50. Let's see if it can hold 70 in the daily 50 here and try to fight back to 74.75. If we give out 70, likely coming down to 65, where that next Keltner sits. Tesla, 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 Tesla. The split is this week, folks. Buy Tesla stock because it's Christmas in August, says Barron. Well, I mean, it's very possible, folks. We have seen each Tesla split get the rally and run up into it. This is the last week. After close on Thursday, it will split 3-1. Already at the daily 21, the daily 21 has caught up to our key level 865. So, let's see if Tesla's going to lead the market to the upside this week, and we are going to get bounces at the daily 21, at like we talked about on ES. We're going to see Tesla hold 865, start this fight back to Friday's lows and 880. Once we get through that, probably a beeline to 900, where all of these daily moving averages sit. The daily 8, pretty much at 900. Daily 200 at 900 and some change, 904. The daily 15 at 895. So all of those are the key target for the cover pop. And then if she's going to lead all the way into Thursday, it's getting back to 918, 930, our highs of 940, and then further, right? Key level at 965, and we got 1,000 up there, right? That's if Tesla's going to do crazy Tesla things, and if market's going to get scenario 1, where we hit the mean and bounce. Because it's kind of hard for Tesla to go that high and the market not follow along. You'd have to see a whole lot of rotation going on. But if the market's going to be weak, basically Tesla rolling back to this 850, this 828. Who knows, this could be the one split where Tesla is not going to run into it. But those are the key levels to the downside. We could slip that 21 and 865 to get to 850 and then just, trap shorts and take off. Watch that trend line from the highs, also coming across those moving averages as we would try to fight to them today. But definitely all eyes on Tesla this week. It's going to play a factor. VIX. As expected, any time lately that we get, or this year at least, that we are going to get down near 20, we need to be expecting that bounce, which will send us back down to the mean in a bullish market, which will maybe show us that we are switching back into a bearish trend, yada yada. We got down to that 20, we bounced around on every gap down, we got annoying gaps up. That was another key sign, right? But ultimately, we bounced, and now we're way up here at 23. And at that key, 23.33. So, if we're going to get a cover pop, looking for us to reject 23.3, head back down to basically where we opened at 22.5. That can provide, that much of a drop can provide plenty of a cover pop in the market and in names. Should we start to give out 22.5 and where VIX gapped up to, call it 22.4, Should we start to give this out, we will likely be filling gaps. We have gapped through the daily 21 on VIX, so we could get a little bit of scenario 1 and VIX in the market where we go up and VIX comes down to retest the 21. But if we're going to see the market roll over, fully get to the mean, we're probably going to see VIX take out pre-market high, this 23.33, and start the journey up to 24.5, where that daily 200 sits at 22.65. It's a pretty decent gap in VIX. It could stay in between these key levels, start a slow roll back while the market tries to start a fight higher. So yeah, definitely watch this gap and that 21. If we're going to get scenario 1, where we hold those POCs and moving average, the daily mean on ES, and start to have a climb back up to the highs we just sold off from, we're going to see VIX fill this gap back to the 21 at least, back to the daily 8 and 15. But VIX can easily gap and go if we don't get much of a cover pop. If we slip to the mean and try to hold there, we'll probably see VIX get up above this 23.33, tag 24, kind of hang out, maybe get to that 24.5, right? So that's pretty much it. Hopefully this was helpful for everybody. Thank you guys for tuning in. We'll see everybody in chat. If you're new to Predicted Trades, this is your first time tuning in, you can join our Discord server for free. A link in the description and a link to our website in the description so you can check us out. We try to provide a great service for all of our members and direction in the market. And we also provide a proprietary system that helps predict prices on options contracts, the best prices to enter and exit. Given all the market conditions that go on, our beast system on your options contract is the best way to go. So definitely come check us out if you're new. For everyone else that's already in, we'll see you in chat today. And for our new members that joined over the weekend, you should all have access, and we're excited to start your journey with you. Thanks. Have a good day. Good luck today.